The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today, we're going to dive deeper into the bigger picture and ask yourself some questions that will help you clarify where you're at with your trading and hopefully improve your perspective and understanding of where you're at to gain that 1% improvement every single day. These are questions that I asked myself and that I constantly refine as I try to grow and scale my trading business. And some of the questions that we'll go through today, and then we'll go back through my approach Monday, Wednesday, Friday, understanding what my thinking is, my rationale, and my approach when I go to the markets each week. What are the setups that you have mastered? So I repeat this in a lot of the mindset reset videos in that I ask traders the question, what setups have you mastered? What setups do you understand where it's easy to make money on? Money making setups, as opposed to going to the market and trying to read or find something to trade each day to make some money or catch a move, count levels and pushes and get into a trade. Or do you actually have trading setups that you've mastered that you know they're easy to make money on? What setups are those? As I've talked about, my friend Steven in New Jersey, he's a reversal specialist. He focuses on certain setups only. Now, do your setups give you unlimited scalability? Meaning, if you continue to trade those setups, do they give you the opportunity to scale in large size? So if you're trading on a little 1-minute chart and counting pushes or catching moves, could you really scale that up and reproduce those results? Or do you have a bigger model, day 1, day 2, day 3, range expansion opportunities, reversal opportunities that are driven by other time frame traders that you know are not coming back or are going to give you a large move before there is any move back against that? Are those setups easily reproduced week in and week out? How frequently do you get opportunities? So as I've mentioned, 2 or 3 large, scalable, parabolic opportunities will significantly compound your account very, very quickly. So how easily can you reproduce your results? As I mentioned, my approach is very simple. Monday, opening range, day 1, day 2, day 3. Wednesday is a reset day. Day 1, day 2, day 3. I talk about how the front side of a week can often be the setup into the back side of the week. And I talk about how traders trying to trade each day inside of the minutia often miss out on the larger, bigger moves because they're so caught up in trading little micro movements. Number one, they don't understand the larger templates. But number two, they often will get chopped up, have a good day, get chopped up the next, get beat up a little bit, and not have the understanding, or they'll take a day off. They'll miss the large move on the backside because they're psychologically beat down. They don't actually have an approach. They just go to the market each day looking for something that's going to give them a trade. So do you have unlimited opportunities for reproducible, repeatable, money-making trade setups? And if you do, which ones have you mastered? Do you have limited downside and maximum upside on your trade setups when they present. Meaning, what is the maximum upside on a trade? 5 to 1, 10 to 1, 20 to 1. Limited downside, risking a small amount because it's set up so well and about to explode in the direction of your trade, and your downside, if indeed it does fail, is very limited. How frequently do your setups present? Well, I know with my approach to the markets, they're repeatable because every single week, Monday to Friday, we have opportunities following a basket of instruments that there are multiple best trade candidates on any given day for a parabolic opportunity, front side and back side. What is the maximum upside on a trade? 5 to 1, 10 to 1, 20 to 1. Limited downside, risking a small amount because it's set up so well and about to explode in the direction of your trade, and your downside, if indeed it does fail, is very limited. How frequently do your setups present? Well, I know with my approach to the markets, they're repeatable because every single week, Monday to Friday, we have opportunities following a basket of instruments that there are multiple best trade candidates on any given day for a parabolic opportunity, front side and back side. But as I've mentioned, even 2 to 3 bigger picture, scalable, parabolic opportunities will significantly compound your account. Next question, how well can you manage the trades once you're in them? So if you're trading a lot of minutia and micro movement, and you're used to getting a lot of heat on your trade or getting stopped out or getting a little bit of movement and then it pulls back, and then you get the larger time frame opportunity and you trade it the same way, but you're so beat up and shell-shocked from other trades that you manage your larger opportunity the same way, and you get out too early, you cut a winner too fast, or you hold on to a loser too long. But on the larger time frame opportunity, you'll grab 25 pips or you'll grab 50 pips and potentially miss out on a 150 pip move that wasn't going to come back or more. So how well do you manage your trade entries? How well do you manage the bigger picture, the opportunity, the setups that you've mastered? Or again, do you just trade each day the same, going there looking for opportunities to catch some moves? Can you scale into your best trade setups? Scalability. So do they have scalability, meaning the larger, bigger picture, the larger moves? Can you add size into those trades? Or are they again on micro movements and whipsaw little time frames catching moves where there really is no opportunity to scale in? Or if there is, the upside is still not as opportunistic as a larger time frame opportunity. Can you hold on to a winning trade, or would you easily get shaken out of a winner? So again, how well have you mastered your 5-star money making opportunities? As I mentioned, do you get into a trade and get out when it's an all-in day, when it could keep going on a range expansion, or from one side of the week to the other? Free Cash Friday. How big can you scale your trading business using your current approach to the markets? How big can you scale your trading business using your current approach to the markets? Scalability of the overall big picture. And again, today we'll look at some templates and understand again the simplicity of first green day, first red day, which are within themselves opportunities for reversal, larger reversal opportunities, other time frame traders driving those moves. So the question really is, what type of trader are you, or which type of trader do you want to become, or how do you want to be trading? Do you want your trading to be, as Paul Tudor Jones says, stress-free, bigger opportunities, making it simple, or do you want to be eyes bugged out, stressed each day, going to the markets, emotional, impulsive, and irrational, with no larger, bigger, scalable opportunities that will really significantly grow your trading business? Over time, is your model scalable, unlimited scalability, to really significantly grow your trading business. Now, going back to my approach, Monday, day one opening range. Tuesday, day two typically expands the range. Wednesday is the midpoint and the reset within the week. Thursday, day two can be a reversal or range expansion type day and a signal day. Friday is the closing range of the week. Now, I want to emphasize something. You can understand market maker templates and all of those different technical models that make trading so simple. But the reality of it is, those models have been out there for years. Where do you actually make scalable money? Trading directions, and as I mentioned, trading 1% on each trade and taking trades every day, over time is a 50-50 approach. What setups do you make money on? What parabolic opportunities can significantly grow your business? So on the front side, if traders are trading and they're, maybe Asia, London, or New York, often catching moves, getting into moves, trends, whatever they may be. But I ask the question again, are those just trades, taking trades, or are they scalable models that your business is built on? How much size would you put on those trades? Now, there are obviously session trades that just bread and butter money, as I've talked about, but what setups will significantly grow your account? Talking about pushes, M's and W's, all of those things are great for the big picture. That explains the picture after. But what setups will you scale into? As I talk about, Stephen, he only trades certain setups. He's mastered those. That's where his expertise is. What setups have you mastered? Which setups are scalable in size for you? So I'm going to just take a few templates from this week. We can go and look at random ones, but understand also that we have larger templates and we also have setups on the days themselves. So we have a larger Monday to Friday template, and within those templates, certain days will offer certain setups based on that larger time frame template. And as I've mentioned, and we'll see, this was a textbook example week of how there were opportunities for session trades on the front side, depending on the session that you traded. But on the back side, we had large, scalable opportunities that significantly compounded traders' accounts this week. In the playbook, I put emphasis on 3-day setups, trigger days, and signals. Day 3 longs, day 3 shorts, first red day, first green day, the inside day. Now, I want to emphasize again, I'm not trying to read the templates and follow the market maker and all that sort of stuff. I'm looking for where the parabolic setup presents. I've talked about having a basket of instruments for Asia, London, or New York, depending on the session that you're trading. We've talked about front side, back side. And just in simple terms, front side is Monday, Tuesday, Wednesday. That's the first half of the week. Wednesday is the midpoint range of the week, heading into the backside and the closing range of the week. Friday is the closing range of the week. So when we talk about opening range and initial balance, that gives us a lot of valuable information heading into establishing a thesis. I've had traders ask me, can you cover peak formations? Now, there's videos on peak formations, but the high and low of the day, the high and low of the week are your peak formations. Understand, they are made in sessions. Those are the levels that are most important for the larger time frame templates. Now, this is my model for scaling my trading business. So separating people who want to go and take trades every day versus being willing to sit and wait for the larger scalable opportunities over the course of the Monday to Friday template. Now, my fundamental approach is I'm looking for larger pump and dump or dump and pump opportunities. And so just to reemphasize, this is my approach to the market, my thinking process over the bigger picture to build an unlimited scalable trading business. And so the questions you have to ask yourself are, how do you want to try and grow your business? Is it just trading, within the session and scalping some moves, which is entirely, again, if it's working for you? if it's working for you and making you money and it has unlimited scalability, or you're just quite happy to trade and scalp moves. It's all dependent on what you yourself as a trader are looking for. But my approach is I'm looking to really significantly grow my trading business, and I know where and what type of opportunities I can scale into with size to significantly compound that account. Dump and pump or pump and dump. We'll walk through a couple of templates. I hope traders understand, like, a lot of the questions that I get asked are things that I don't really deal with. A trader asked today regarding how do I identify the candle that helps me establish a daily bias. I don't do that. I'm looking at the larger template. When traders ask about peak formations, I talk about the levels, the 3 levels: high of day, low of day, closing price, which every single trader has when the day starts. And also we have closing price when the week ends, which starts our new week. So as an example, we talk about Friday being the closing range of the week. It's made a lower low on the inside of the high of the week. Thursday, therefore, in this particular case, was our high of the week. But let's just go back to our Monday opening range thesis. Monday opening range is an example of a session trade in the US window coming off of a first green day on Friday. Now, I want to point out my goal or my approach is I'm looking for the dump in certain markets if they're there in my session, or if I choose to trade them on that opportunity depending on how the template sets up. But I want you to also understand, if this is the low on Friday and this is the high, this is a great session opportunity. I'm buying high. So I want to talk about a couple of things with regards to this. Like I mentioned, my friend Steven, he's a reversal specialist. He does not touch a market until it goes outside of a previous day or week's range. So if I'm buying up top here, I'm buying a market that gives me a great session trade, US window, on its way back to the high of the week potentially. But I'm also taking this as a session trade on the front side of the week, the opening range. What was the signal on the day? Well, we had first green day, but we also had a market that broke the previous day's high. We have higher highs heading into our US window, and we have a coil for a parabolic continuation trade on Monday, day 1, our opening range. Tuesday, day 2 expands the range, and we have a session high of day, high of week, shorting opportunity at the beginning of our US window. Again, day 2. Now, I want to point out to traders, this is also the third day from Friday's low of day. Day 1, day 2, day 3. A 3-day setup blowing off in the direction of the trend. A US session reversal at the high of the week. Again, a session trade. Why is that? Because we're shorting on the front side of the move still. Day 1, day 2, day 3. On Monday, the opening range, we now have a breakout. So as I've talked about, my friend Steven is a reversal specialist. He only trades markets that break out when they give him the reversal setup. So we have Monday's opening range is now a breakout of Friday's high of day level. Friday's high of day level, we can project that across. That can become an important level over the course of our template. Now Wednesday is day 3, and that resets to a day 1. And lo and behold, we had first red day at the close of Tuesday's closing price. First red day is a signal day. Now, how does price behave over the course of Wednesday on our reset day? It makes a peak formation high before dumping down on major red news. Now, I'm just going to state here, if we're only looking for a first red day shorting opportunity over the course of our larger template, understand that no trades need to have been taken whatsoever. So, as I mentioned, my friend Steven would be sitting on his hands and waiting, whether it was on a 1-day reversal opportunity or over the course of a week. But we have breakout traders now in the market. Wednesday, major red news brings our first red day underneath of Friday's high of day level. Friday's high of day level. We can project that high of that consolidation on Monday's opening range across, underneath our peak formation high inside of our first red day, on the backside of the week now, heading into our closing range on Free Cash Friday. I would also like to point out the nature of the price action Monday, Tuesday. Choppy escalator, sideways consolidation, up peak formation before consolidating. So I talk about sometimes traders get chopped up on the front side, or they take trades, they get a session trade, some excellent opportunities on Monday, Tuesday on this pair. Major red news, again, I talk about avoiding the news. Often it is used to hit stops. We can get certain setups that will be catalyst opportunities. But again, over the bigger trading business model, taking trades on major red news is a very small part of that. It is only when that expertise has been developed, and I recommend to traders to avoid trading major red news. An excellent question from a trader was, you talk about not being in the market. Well, if the market's at 10 a.m. and there's a first hour opportunity for a session trade on an instrument, I still will be willing to take that trade. But I am out of the market before any major economic releases come out. I do not gamble on the news. I don't try to, put limit orders in. That is not scalable. That is very risky. And again, coming back to the big picture, what trade setups make you a lot of money? Not getting lucky, not gambling in the market. What setups are you scaling and growing your trading business on? These are the questions only that you can answer. So when we come to our backside, we have a first red day Tuesday. We break down on major red news and we go into consolidation. We have an inside day. Inside day in the playbook, again, is a very significant signal day, depending on where it presents in the template. We have our first red day shorting opportunity for a parabolic range expansion, potentially setting up into the close of Thursday. Again, I talked about the basic model for trade entries to keep analysis paralysis and keep it very simple for traders to be able to execute the trade when the larger template thesis presents. This is a 30-minute chart. So if that is met on a longer time frame, we have other time frame traders driving this move. We have a little rollover from closing price, a pump up in the Asian window, and the parabolic move beginning in our London window. Day 1, Day 2, Day 3. Now I talk about two types of opportunities on a Day 3, a Friday, the closing range of the week. We can get parabolic trend trades and parabolic reversal trades. Now contrast that with the front side of the week. How much size would you be willing to put in on these trades? The front side, Day 1, Day 2. Again, talking about scalability. So these are session opportunities versus a 3-day template set up over the course of our week Friday's closing range. A 3-day coil above closing price for a potential target of 200% expansion of the high-low range. This is a scalable, repeatable trade setup that shows up repeatedly. Now, when I say repeatedly, it doesn't show up every single week on this instrument, but we went through this in one of the most recent videos, the same opportunity, first red day, consolidation for parabolic range expansion. This is a scalable opportunity. At no point did I talk about trying to catch the high of the day or catch the low of the day or find the 3 pushes or the M's or the W's. This is a Monday to Friday template. Now, I could get a completely different template on this instrument next week, which is why I follow a basket of instruments and I'm hunting out the best opportunities when they present. Breakout traders in the market, Monday, Tuesday, Wednesday. First red day signal reverses on major red news and coils underneath of the opening range for the parabolic range expansion. That is a scalable trade setup that will show up again and again and again. It could show up next week on any instrument. No idea. But that is a scalable trade setup, which will show up over and over and over again. We'll go look at another example. Look at a crypto pair, and just to demonstrate, a lot of traders have asked questions about crypto. Could I cover crypto? So the first question I always get is about how do you do the day count when it's 7 days? And I repeat this over and over again, and I just ignore the weekends. Monday's day one, opening range. We have a high of the week shorting opportunity early in the day on the reversal trade. We have a market that's in breakout on the weekend, and that's a high of week reversal opportunity starting our week off. That starts our week. That market breaks down and gives a low-hanging fruit trade in our U.S. window again. High of week shorting opportunity. It's already underway. The market has already in the reversal template. This is a reversal model. Shorting opportunity in our U.S. session. Now, if we just go back to our basic model, Monday's the opening range. Tuesday, day two, expands the range on the downside. Paul Tudor Jones, if a market's giving you an indication of a range expansion, pay particular attention to that. Day three, Wednesday, is our midpoint range of the week. And that we have breakout traders triggered on the downside on day two that pulls back inside. We have breakout traders triggered on the upside on day three that pulls back inside. You'll notice our closing price stays horizontally through that area. Monday's opening range closing price. We've auctioned down from Friday, and the market is moving sideways. This is the day zero template. A 3-day template, peak formation low, peak formation high, consolidation. Page 84 in the playbook. Now, I've talked about staying out of the inside unless you have a parabolic 3-day coil. Coming back to our universal EMA, into our US window, we have a market now that gives us our parabolic day zero setup for a potential range expansion of high-low on Thursday. On Thursday, I had Friday on the wrong day there, for a range expansion profit target, an example of a day two trade that expands the range on the backside with a parabolic trading setup. So again, we just looked at one that was on Friday on the Euro Yen. This one's on a Thursday on a crypto pair. Now, we could probably find other instruments that also gave day two parabolic or reversal trades. We had reversal trades on the indexes. Let's take a look at those. Now, just pointing out again, though, we had breakout traders in the markets from our weekend. If we go back to our Friday closing range of the week on the crypto pair, we're in breakout heading into our new week. Breakout traders in the market. Consolidation. We had a first red day on Monday. A lower low on Tuesday, day two. The market pumps back up and takes out the high of Tuesday. So we have breakout traders triggered short. They go back up, hit the high of the day before pulling back in and consolidating. And again, notice that closing price has not changed. This little subtle change is still the same thing. They're just auctioning around closing price of the opening range before coiling and going parabolic on Thursday. Contrasting, I bought the low of the day on Tuesday and traded it back to closing price. Now, if that trader is choosing to take that as part of their model, understanding we're day two on the front side, but they missed the trade maybe on the back side because they're waiting for it to break out. Understand the difference. When the market coils and gives us the larger template setup, this is the scalable opportunity for a range expansion trade. So again, asking yourself, how much size would you put on this trade or this trade versus having a 3-day coil and understanding that now we have a market that is potentially going parabolic, separating a session opportunity from a 5-star all-in parabolic setup. We're looking at the NASDAQ coming back again. Simple process. Monday, day one, our opening range. Monday was an inside day. And you'll notice again, closing price of Friday, the market just auctions around that level. Three levels that every single trader has. High of day, low of day, closing price. Regardless of what day this is, we have our high of week, low of week also, and the closing price. But the reference point that starts our week off is the closing price. Every trader has this information when the new day starts. So if we just go back and look at the closing range of the week, Friday, we had a large dumping day, the reversal trade on Thursday after it broke out. And then our new week starts, we have our inside day. Tuesday, we get a trigger right at the high of our inside day from the playbook. Page 69, inside day, false break, and trend trade opportunities. As we talked about earlier in the week, NASDAQ and S&P both gave the same setups, and an example on the 5-minute chart of where the New York Open gave traders a fantastic reversal opportunity at the high of the week on day 2, expanding the range. Monday was an inside day. Signal days. So we had an inside day on Monday. We have a range expansion on day 2. We had major red news on Wednesday, day 3, that gave a vertical move down to the low of the week. Again, not a parabolic trade setup, just addressing the template. Reset to day 1. A reset to day 1. We now have our new midpoint range heading into the closing range of the week. The market breaks out. Now we had the Dow Jones on Thursday break out for a reversal trade. Other S&P, NASDAQ gave the parabolic reversal from the inside, but this market broke out. It broke out at the end of the day. Again, fantastic reversal opportunity on Free Cash Friday heading into our US window. The other two indexes did not break out of the high of the day. We now have a reversal opportunity heading into our US session on Free Cash Friday. Two types of trades on Friday: parabolic trend trades, parabolic reversal trades. At the open of our US 12 candle window, we have our little pump up into our basic entry criteria for trade entries. We had major red news at 10 a.m. and the market was already broken down on the inside for the continuation reversal trade on Free Cash Friday. This is just an example on this instrument. If traders were looking for that reversal trade, the trade is already underway in the London session coming off of closing price. So the markets broke out. Now the reversal has started, lower low on the inside. Now several traders are going to say, but I thought you couldn't trade the indexes till 9:30. I don't trade the indexes until 9:30 unless they've broken out. We have a breakout now that has already started the reversal. This is an example of a 2-day reversal, and we'll look at a couple of those as well. Now, again, understanding, going back to the larger template, we're in a trading range largely for the entire week. The market has gone back up to get the previous Thursday's high of week shorts. It's broken out and now in reversal heading into our US 12 candle window, and we're back inside of Friday's closing range high and Monday's opening range for the week on Free Cash Friday, day 1, day 2, day 3 reversal trade. Looking at the Euro USD, we had major red news on the Euro this week as well. And I want to just point out again that my goal is not to try and sell this right here. I'm looking for setups. And I don't care if the news moves the market or anything else. So traders have this perception. And I know there's traders that get in because they want to be in that big move on the news. But again, my question for myself always is how much size would I be willing to do that and blow my account out? So I just trade where the simple model is when the trade sets up, where there's no major red news, or if there's news and I'm already in profit, that news could potentially complete the move. So I don't worry about trying to catch this large movement. I'm not trying to sell the high or catch the low. I'm looking for specific setups. First green day, first red day, the parabolic range expansion opportunity. So we have our Thursday, Friday. Thursday is the high of the week. Friday, peak formation low. So traders ask again, what are peak formations? Peak formations are what form these blue lines. That's the high and low of the day. Then we have a larger template that can set up where price is inside when a new week starts. Monday's the opening range. Monday goes higher than Friday's high of day. We have breakout traders in the market. Remember what I said about my friend Steven. He doesn't even look at a market typically on a day unless it's broken out of a level. But I'm looking at the larger template when it breaks out for the larger opportunity. Now, I know there's traders that it goes down and they go, I knew it was going down and I should have got in. And then there's other traders who actually get in here where, again, the question is that really scalable, or is that trying to catch the move and get lucky? That's my thinking. That's my thought process. And again, if it's working for you, keep it up. Now, when we have a larger rectangle present like this, this can be a possible rectangle geometrical expansion. Again, go back, Peter Brandt, classical charting, Schabacker, Edwards, and McGee, for a potential profit target as we head into the backside of the week. Wednesday is our midpoint range and resets to become our new day one. Now we have a first red day, obviously CPI, we had PPI on Thursday as well as ECB. And at the close of Thursday, we have a market that is still making lower closes and lower lows. We have a peak formation high, peak formation low. Again, a day 0 3-session template. That coil sideways now, heading into our day 3 free cash Friday, gave traders a parabolic opportunity that began at the end of the Asian window, heading into our Europe Open, targeting now a 100% expansion of that range. Again, scalability. So contrast that. So number one, front side, we hit our midpoint range of the week. We break down after a first red day signal, coil sideways on a day with major red news, not only for the instrument itself, but in the US window, closing lower and coiling underneath of closing price on day 3, Friday, the closing range of the week, for a parabolic trend trade on the backside heading into the close of our week. So I want to keep emphasizing to traders, I don't need to sell it up here. How scalable is that? How scalable is this? In what I'm suggesting with that is that, yes, looking back here, traders would say, I should have sold everything and put the load of the boat on it. And then the next day we could have went back up one more time. That is not a setup. That's me trying to catch the high. But this, on Free Cash Friday, is a parabolic 3-day coil heading into the open of the Europe window for a parabolic range expansion, 100% expansion of the range as a projected profit target. I can scale into this trade. I have limited downside and asymmetrical risk reward as the upside. It's a setup, not catching the move. I don't need to sell the high. I don't need to sell the high of the day. I can position myself in the market as it's about to explode and accelerate and scale into that opportunity on the day, depending on what setup I'm about to trade. Everybody's favorite, Goldzilla. Now, this was a fantastic week for several traders on gold. But going back to our process for just the larger template opportunity, we have our opening range on Monday. We've broken out of Thursday's high of day. And we have breakout traders in the market. That market came down and went parabolic in the Asian session, making a higher high on day 1, our Monday. Now, on Monday, we potentially may have a low of the week locked in place. We got our little W pattern on a Monday, as we saw with our little triple top M pattern on Ethereum, on the crypto. But we have a higher high, a market that's in breakout now. We have breakout traders in the market. Higher high on Monday's opening range. Tuesday expands the range. Day 2 expands the range. And that puts in a higher high at the beginning of our week on the front side. That market breaks out on Wednesday on CPI, trades into our closing price and our low of day level from Monday's opening range. Closing price starts the week. Every trader has those levels. Thursday, day 2, so our reset day on Wednesday, has put in peak formation low, and a lower peak formation high inside of our high of the week. On our reset day, Wednesday is day 3 on the front side, and heading into our back side of the week becomes a new day 1, and we have a day 0 template. The market also closed out of balance. So I know traders still asking, what does that mean? It means it closed outside of the previous day's range. Now this is significant because we made a higher high on the inside. They made a higher high on the inside. They later went up to that level at the open of our New York session. We'll project that across in a second here. Higher high on the inside. That is a dump and pump template short squeeze. Day 1, day 2, day 3 day setup. A 3-day setup. So again, differentiating between day 1, day 2, day 3 on the front side. Monday, Tuesday, Wednesday. That's a Tuesday, Wednesday reset. Thursday, a 3-day setup for a short squeeze parabolic explosion blowing off on day 3 in the direction of that trend. Now, price is entirely above the closing price on day 3. This is a first red day template on a Friday, the closing range of the week. And as I put up on the community post, we had the same exact template on December 22nd, which we will look at again in a moment. Again, traders up high. Asia puts in a higher high. London puts in a higher high. Now, I mentioned to traders yesterday the importance of timings. The 9 a.m. candle, New York Open, breaks out. We have major red news at 10 a.m. We have 1, 2, 3 hours to the high on major red news. The third hour after the breakout, this is a 30-minute chart. We'll go and look at this on the 1 hour just to demonstrate this. We blow this up. 1 hour, 2 hours after major red news release. Third hour reversal. 1, 2, 3 to the high. This is a 5-minute chart. A 5-minute chart which was also a 100% expansion of the range, which I will show in a moment. New hour starts. The new hour starts and goes 1, 2, 3 engulfment. Beginning of the new hour. And this is where they pull the bids. Pull the bids. What that means is they lift the price. They lift the price up on the entire day, going parabolic on Free Cash Friday. This is a Friday, the closing range of the week. It's not Tuesday on the front side. This is what traders need to understand. It's a Friday. This is a Friday template for an all-in session reversal opportunity. You will see this template again and again and again. We'll look at an example of this in a moment, but I emphasize the importance of timing. 1 hour, 2 hour, third hour reversal, 1, 2, 3 at the high at the new hour for an all session collapse that is not coming back. A 5-star first red day template shorting opportunity on gold. One trader said, yeah, but you can't, there's no levels up there. Yes, indeed, there are levels. We have a 100% expansion of our rectangle formed between Monday, Tuesday. Our opening range and initial balance. Classical charting principles. Our 100% expansion of our range is hit right at the end of the hour. What a coincidence. For an all session collapse back to 50% of that range, which was essentially the closing price of Wednesday, our midpoint range of the week. This is December 22nd on gold, 30-minute chart. I'll just blow this up a little bit for traders to see. This is Friday right here. And again, the same template, a first red day template. We're above closing price. They go parabolic. There was 10 a.m. major red news. If we go to the 1 hour, you'll see the same. We had major red news at 10 a.m. Let me draw that line. 1, 2, 1, 2, breakout, the breakout, and a third hour reversal. Same thing, 5-minute engulfment for the collapse back into higher level longs. In this particular case, it didn't come back quite as far as what we saw yesterday. A different setup, but an all session fade that closes at the low of the day. This is a trading setup on a Friday. We can see it on different instruments depending on the templates. I'll look at another, we'll show another example in one moment here, but I want to emphasize on Friday, this is a trade setup. So I know traders are asked about getting the parabolic move. And as I mentioned, how much size can you position yourself in? This is later. This is into the US window right here. So how much size, if you're not already in the market, would you be comfortable putting on this market? There's a reason why they do that. But when it collapses and drops, it goes straight down with zero heat. That's the difference on a reversal trade setup on Friday, Free Cash Friday, as opposed to taking the parabolic trade or trying to get in the trade because you're perceiving that the trend is up. This is a trade setup. This is a similar example on the pound Australian. On a Thursday, same type of template. They go parabolic, 1 hour, 2 hour, third hour to the high, the open of the US session, 8:30 a.m. for the collapse all the way back down. A reversal setup on a Thursday. You can go look at that on your chart, March 28th. My point is this. There are specific setups for trading. Traders, you aren't in this move here. You come for your US window or you're outside. This is the high of the week. Again, on a Thursday, as opposed to the gold trades we saw on a Friday, the same type of setups will present when they go parabolic like that. There are certain scalable opportunities for reversal trades or trend trades. Monday to Friday template, there are opportunities on the back side. There are opportunities on the front side. And if traders are willing to sit on their hands and understand the power behind those larger range expansion parabolic opportunities, you're trading one trade wipes out one scalable trade opportunity, wipes out 5 little hit and miss 50-50 trades. Scale the right trades up. Be willing to sit on your hands. Make your trading a pursuit of pleasure. Make it easy on yourself. Compound your account quickly. Chasing minutia and marking levels and pushes is not reproducible. It is not consistently reproducible. It is not scalable with size, real size. And as I said yesterday, putting positions into a trade is not the same thing as being able to size into a scalable opportunity that has asymmetrical risk reward. And these are the things that will make your trading business grow. So coming back to our initial starter slide, these are only questions that you can answer for yourself. And if you are struggling or you're not consistent or you want to take things to the next level, get very specific about how you will trade the markets, how you will grow your trading business, how you will be able to scale it up, really scale it up, and make things easy on yourself. Make money on the days that it's easy to make money with money-making setups. Keep it simple, traders. 1% better every single day. This is a winnable game. Have a great day, and may the markets go with you.